Hello, it's trading room time. Let's get into the midweek update for September 28th. We are coming out of what's supposed to be the weakest month of the year, and it has lived up to it for sure. I talked about this briefly on Monday. But here we are on Wednesday. We really haven't done much, but just kind of stayed at these lows. So let's jump into it, folks. Okay, I've got my 2 cents. We're going to share some trades, take responsibility for the outcome. You guys know the ordeal. Let's jump directly into what's been going on. So the markets take just 3 days to revisit June lows, and we've had a lot of discussions. Well, I should say I've had a lot of discussions working with some of our traders here and some of the boys at the office, and we all have come to a conclusion that these markets were willing to give it back. They just needed a reason, and boy, we sure did. We're back down there very quickly. The FOMC stance remains hawkish and on pace. There's the argument to be made that they did too little too late. One thing I love about the Fed is they're always going to be put behind the 8 ball. I watched this. If you guys remember Alan Greenspan, I don't know. There you go. I just dated myself. Back in the late 90s, early 2000s, when they raised interest rates when the markets actually peaked, knowing that a slowdown was coming, and they were blamed for the cause of the correction, the dot-com bubble bursts. Well, 5, 10, 20, 30 years later, they realized that it wasn't the cause, and they just saw that it was happening. So regardless of the stance that you have on the Fed or what you think they should or should not do, we're where we're at. And the markets are trying to kind of catch up and keep pace with it. So sentiment-wise, it's bearish. And it's easy to see bears because once we saw that inflationary number come on with the CPI and the Fed comes out, didn't do the full 1% or 100 basis points. They just did the 3/4 like they said, but they said they wanted to stay on pace. The markets did correct pretty quickly back down to those lows. One thing that I thought was pretty interesting, guys, and you've probably noticed this, is the VIX is moving into capitulation levels. For the first time, for the first time in a long time, I should say, seeing this VIX get up into the 30s. We're barely there today, and we are due for a bounce. I do have to echo what Corey said on Sunday and even yesterday on his post. I agree. We're due for some sort of a capitulation, or excuse me, I should say consolidation at these areas, or even a bounce is pretty much imminent. But understand these bounces are going to be pretty weak, and it is in an overall bearish trend. So what is going on? Well, I took a look at some of the economic data, and I'm going to share it with you. Boy, by the way, I had to add an extra slide. There is a slew of economic reports coming out this week, or have already, but there is still expansion in some areas. Now, it could be a little bit of lag, but when I see housing starts, contracts, those things starting to go down, however, new home sales at a new high, we exceeded expectations, over 600 and change, I believe, on new home sales. So that's not slowing down, and we're not seeing the impact on the consumer just yet. In fact, consumer confidence actually ticked up as well. So we've got this double-edged sword where, yeah, we know the economy is going to slow down. We know things are going to be bad, but we haven't felt it, not as consumers, and in some of these numbers. So we'll get there in a second. All right, so let's take a look at some trade ideas, and they're pretty tough. We've got a bunch, and I've seen... well, not a bunch here, but I've got a bunch on 3 or 4 watch lists going all the way back to the 7th of September, folks. Yes, I've got some trades that I've been looking at since the 7th that are still hanging in there. The problem that we're running into is a lot of these are bouncing. A lot of these bearish trades are bouncing, even though the markets haven't yet. And I love to speak at what we talk about here at Maverick, and what Corey was saying the other day is, we're in for a bear rally. It's just if you're willing to sit through it and how long it's going to last. Sometimes they could be anywhere from 3 to 5, 6%. So it could be about a week, 2 weeks. And it's very difficult for somebody like me, personally, that's flipped over onto the bear side to just get too preemptive and too excited and throw a dart too early. So just let this play itself out. So what do we have? Wing. This is something that's been on our watch list for a few weeks, and it looks like it's got another possibility for a bull trade if you guys want to play the idea that we could consolidate here or actually bounce. We've got the neutral trades. I've got coin. This was on my bear watch for a little bit, but I moved it over to neutral because it could consolidate. Now, there were some discussions about the cryptocurrencies. The Fed actually talked about it yesterday. about its future, what could possibly happen, and it was pretty bland. I didn't get anything out of it. I'm not sure if you guys did. And then on the bearish side, we were at tech again. VMware, Nvidia, Microsoft, still looking pretty good, but I wanted to show these charts because just like the majority of my bears, they're in this consolidation or bouncing period. All right, let's just jump straight into the first. This is Wing. And I've liked this one for a little bit. I thought that we were going to have a little bit of a bounce back in this area, and it didn't. It rolled over. But it is still confirming as of today, almost yesterday, but as of today, it's almost there, a higher pivot low. And that's going to be from this previous area here at the end of August. So it's still got this kind of a pattern of we are increasing. So if you want to draw this channel here, I can completely get behind it. However, if you want to slow play it, thinking that I don't think this is going to go from the 130 level it's at through 140 and then up to 150 plus, this could in fact create maybe a head and shoulders pattern, right? Now this is kind of the theme that I have for today is we can play oversold market bounces, but they're difficult. They're super hard, and it's almost counter trend trading. Now, this isn't counter trend trading because it isn't an uptrend. It is showing signs of higher highs and higher lows, and it is, well, at least at this point, it's above the 50-day moving average. But counter trend trading, in general, is very difficult because you have to time the market. Sometimes it's 3 days, sometimes it's 2 weeks, sometimes it's everywhere in between. So you have to have shorter-term targets. So in this situation, I would be pretty comfortable with maybe a target, I got to erase these first, at that 140 level, more so than going up to the 150, where in a general strong market, I would be happy with, hey, here's the pivot, here's a pivot. Let's go ahead and, here's my target at 150. I've got my entry at about 122 and a half, 125, whatever you want to call it. I'm fine. But the markets are not uptrending. The markets are not bullish. We are still in a very bearish market. However, if I want to play that shorter term corrective action that we're kind of talking about with consolidation or maybe even a small bounce in the overall markets, this could maybe revisit the 140. Not the 150 area, the higher end, but maybe the 140. So, shorter term, smaller targets, yes. And then we can play the sideways to bullish, or we could play that, I don't want to call it counter trend because it's not in this, but counter trend in the markets, but overall outperformance in some of these stocks. So that's kind of what I'm looking for overall. So once again, that is basically what I'm touting for this class because I have a lot of counter trend traders out there, and you know who you are. I work with you guys all the time. Just make sure you're not biting off more than you can chew. This is Coinbase. This has been on the bear watch for a while, and I still think it's bearish. However, I moved it up to sideways because if the markets consolidate, if we get some sort of retraction, if we get some sort of area where the bears just take a break, we've got a pretty decent range here. Let me go ahead and draw some of the lines. I'll go all the way back to, mid-July at about 80. And then I'm just going to go recent support from 60 backwards. So I've got this range right through 60 and 80. And yes, folks, that's a $20 range. It's a big one. I've got a crossover here that I think is pretty bearish, but it did bounce off of that 60 support level. Now, I don't think this is going to get up to the 80. If you guys want to put up your Bollinger Bands and see if you can't squeeze that down, you might see something that I don't. However, it might play between this 70, which is that 20-day moving average here, that blue line, and the support level that just bounced off of 60. I would not. It'd be fine. It could get maybe to the 50. Maybe it gets all the way to 80. That's fine. The idea is we're trying to play something sideways in the intermediate to short term. This could be a possible play. So something sideways to bearish. And why am I saying bearish? Well, I don't know if the markets are going to roll over and die in the next couple of days. But it's best to play in the overall trend, which you could see. Let me get rid of my lines. That it is definitely below both moving averages. And it is showing a lower high. From this point to this point, the overall trend is down, but it does have this overall descending triangle pattern. But hey, if it can stick between the 70 and 60 over the next 2 weeks, week and a half, whenever the market expectations or whatever we think the markets are going to do in consolidation or bouncing or corrective action, this might be something worthwhile. So not shooting for the moon here, folks. I'm not shooting for 90, 100, 110, just sideways to boring. There you go. Now on the bear side, and it was interesting. I was building this class today, and I was pretty reluctant to throw these charts up there because they all have green candles. You guys know how I like to roll here. I want to see something that's confirming today, something we can get in today, something that we can talk about that will trigger tomorrow morning. That's kind of not the case. We're caught. This class kind of lands on a consolidation area at support in the market, so expectations are for maybe a bounce. That being said, it is definitely on my watch list. Why? Well, let's take a look at it. Great support here. It might consolidate. I'm fine if it bounces back up to any sort of level. This is a consolidation level here. We can go back to a previous two support levels there. A falling 20-day moving average. So this is anywhere between where it's at here at about, what is that, $109 to $114. I'll draw a little target there, which is a pretty big range. That's what makes it difficult to trade stocks that are actually correcting or consolidating, because I'm not going to buy this thing from 109 to 114 because it might turn where it's at. It might turn at any one of those lines. But what I want to do is keep an eye on it, because when the markets do roll over and when it does turn, then I want to get into this bearish. So take these bearish trades here, at least the next couple of charts, with the idea that this is early. It really is. And you just kind of have to wait for these markets, be patient for these markets to finish their correction. It might be a little longer than you want, and it might be really quick and short, which means we have to react. But it'll be easy to identify once it's done. All right, so there's BMW. The other two in the exact same sector. It's all technology that I'm seeing. I'm thinking we're going to get another breath before we roll back over. This is Nvidia. Now this one's been on my bear watch since for mid-month, so a couple of weeks back. And it's been doing very well. For you guys that have been trading this thing since it's broke its support level here, this little correction breaks again, comes down. Look at this doji that retests that level. Breaks down again. I mean, this is week 1 here. This is week 2, and then here we are in week 3. So it's been doing really well as kind of a diagonal put spread. Now it looks like it's on its way back up. So please, my counter trend traders out there, don't try to buy this thing on the way back up, because I don't know where it's going to turn. We know that it usually takes about 3-4 days. But if it doesn't, I don't want you to be in it. We got a retracement back to the falling 20-day moving average, right around the 130 level. Wait for it to set a reversal signal and then maybe move lower. Sideways to down, sure. Right? Sideways to down. All right. And the last one is Microsoft, and it was cool because Corey made mention of this yesterday. And I'm glad it's back up, because I do like this, and it has bled off almost perfectly. We are down to the June levels, below them. And this I would be a little bit more sideways than directional. I would just say, hey, staying below the 40 or 240 level, or the 242.5, anywhere that kind of coincides with what June did, sideways. This is going to be a little bit more sideways than directional. I do expect Microsoft to actually climb a little higher, especially since it's such a larger component of the Qs. I imagine that when it bounces, everything, when the markets bounce, this will follow suit. Now, a bounce back up to the 250 level, I don't know. That might be a little bit aggressive. So something sideways to down from here. If you guys want to do a calendar spread, split the difference at 245 in between the 240 that it's at right now here and the 250. Split the difference, allowing for it to make that kind of movement, but kind of sideways from there. So I hope you guys are kind of getting what I'm throwing out there. I'm not super aggressive in direction. Overall, yes, you'll see my outlook here in a minute, but bearishness, of course. But these transitional or corrective, I should say consolidating or corrective markets are extremely difficult to play, especially shorter term. It really is just dart throwing at that point. So that's what I got. That's what I figured I could share with you. I'm sure you guys got some stuff we'll look at here in a second. But let's get into the overall market analysis. And you could see it didn't really take very long for us to get down to those levels. I said 3 days, and they were all but more than happy to give that up, especially with a little bit of a spike in the VIX. So where are we at? Well, the diamonds, the SPY, and the Qs for the week are flattening out. We kind of knew they would. I would have expected, based on the candlestick that we saw Friday, we'll get there in a second, that was a beautiful hammer and we're going to move higher, and we didn't. So this is glass half empty. This consolidation is just showing a little bit of support, or I should say confirmation of support levels, but we're not bouncing here. And it's got me a little bit more pessimistic. However, we'll have to see where these markets go. The Russells up about 0.5%. U.S. Oil and gold up as well. There's just not much to take from it. It's just flights out of stocks, out of safety, knowing that, hey, we're worried about an economic and global slowdown, and so nothing's really changed. But the overall markets, I'm not seeing participation. Take a look at the SPY chart here. I would have expected a pretty good bounce from that hammer candle. And let me go ahead and draw these. This is what I was thinking would happen, at least up to that 380 mark. Let me draw a line. You could see back in where June kind of faltered here. You could see these are some, it's kind of an area where we could have consolidated, and we didn't do that. We're down on the lower end. So you think about that. If we're on the lower end, this is glass half empty. It's not we know the markets are going to consolidate or bounce or correct, but not as much as we saw previous. This is the first correction, right? You guys can see these that I drew. I would expect the exact same thing. There's a little bit more pessimism out there in the overall markets, and it's been kind of echoed through the VIX. It really has. It's been echoed through the VIX. So we haven't seen the VIX in the 30s in a long, long time, and it got back up there. So the expectations are for some sort of consolidation or a bounce, but the markets are a little bit reluctant so far to get there. Here's the diamonds. It set new lows. The SPY revisited lows, and the Qs aren't quite there yet. We'll get that chart here in a second, but this is definitely on the bear side. We're seeing the support levels not even being retraced to. So this is just, it's consolidating below support levels, which you kind of think, well, where do we go from here? I don't know. We'll see where this bounce takes us. And I like what Corey was talking about on Friday, or what we were talking about on Friday as a firm, is we should get at least an oversold bounce or some sort of short cover rally. We haven't got it yet. Now, it's only Wednesday, and it's only halfway through Wednesday. We could easily get that later on today, tomorrow, and into Friday. But we just haven't seen it yet. I'm just not sure if the markets are willing to put that forth. So let's get to the Qs. You could see, oh, wow, it actually did revisit. Well, no, it didn't. It's touched it a couple of times. But there's reluctancy to sell into the Qs. At least some of these I should say outperformers that were over the last few years, some of the speculative stocks. Maybe people are just bored of selling them. They're going to sell something a little bit more safe, right? Energy, things of that nature. We'll see. However, this could easily roll over and fall apart, but I imagine we just consolidate right around these levels going forward. So there's really not much I can get out of any of this, at least today. But hey, it's doing kind of what we expect. Now, economic reports. Once again, I had to add an extra slide, guys, because there is a slew of them, and most of it is just Fed talk. Lots of different chairs coming out and giving their 2 cents and why they feel a certain way, what they see that we don't, things of that nature. But let me get my red pen out here. I've been seeing some pretty interesting things. So we got our durable goods orders. They come in lower than previous, but higher than expected. So there's still orders coming across the board. Not huge. It's still a negative number. There is a slowdown there. We've got the home price, and Corey may mention this yesterday. Home price is absolutely starting to slide. Kind of has to. Interest rates are increasing, so in order to sell somebody a house, if they're going to pay a higher interest rate, you got to lower the price. That was expected, and it's following suit. We also have the FHFA as well. This threw me off. And that's big. So new home sales 532K expected, a half mil. That's blown out of the water. That's 685. That's not a miss. That's a bad miss. Now, I'm going to give it to you this. Economic numbers are usually late. This is for August, right? This is for August. So this could be that last ditch effort, the last round of cash buying. Everybody knows that they've got no chance. They've got to get in their house. If this number doesn't go down substantially next time, I don't see a slowdown in at least cash purchasing of new home sales. Or this could be homes that were already in the works, loans were already processed, and they just happened to close in August. Houses that have been sold maybe June, July. So I'm trying to take that with a grain of salt, but that number's so far off. And then you associate that with the consumer confidence number. This is a consumer that's not affected by any sort of recessionary problems or inflationary problems yet. So 103.6 expected for a slight uptick. Consumer comes out pretty aggressive. All right, take that for what it is. They're just numbers. They're just numbers. But if they're numbers that the Fed will look at, then I don't know why they think they need to slow down anytime soon with something that shows a little bit more expansion. Now, after I said all that, we do have retracement. Now, the trading goods, that coming down, that's that top number there, I expected that to happen anyways, just basically because it's not just the U.S. that's slowing down, it's everybody else. Pending home sales is a good one to see. Look at that. Now, that's the drop you want to see. So pending home sales are coming down, which is kind of why I'm throwing out that new home sales number for now. Jobless claims, we'll see. So what do we have going on? We got the jobless claims, continuing claims. Understand, people aren't losing their jobs. The non-farm is one that I kind of want to look at. I believe it's coming up here on the next slide. And the PCE number is what I want to look at. But we're not seeing a slowdown in much yet. And until we do, I don't know how hard that Fed's going to hit that accelerator. So let's jump over. This is my third slide because there's a ton out there. The PCE price index numbers. These are the PCE numbers that everybody's been touting that the Fed actually truly falls. So they gave you everything you can think of. You've got consumer spending, disposable income, price index, all that. So we'll see where that goes. Chicago Purchase Managers Index expected to subside. That's fine. Manufacturing, it should see, we want to see some slowing moving forward. All right, that's enough of that. Now, what's really cool about this, whatever you see in the numbers, it doesn't matter. What matters is the reaction the markets give based on those numbers. I think that is what we got to take from this. Now, I was just talking about that housing number, and I was talking about the consumer confidence. We're still up for the day. We're still up for the day, right? So I thought those numbers would create some sort of instability. We might roll over thinking that, oh, geez, the economy's still hot. Yeah, haven't really had a problem with it so far. All right, so let's go ahead and pull the class here. So we have been definitely on the bear side longer term. Of course, I don't know how that's going to change anytime soon. I've seen +2 for the short term, +1 expectations of consolidation or a bounce. I know that Corey and myself are actually pretty much in agreement over the last since Friday of last week into Sunday and into Monday and even in yesterday that we still kind of have that same outlook. Not to show my hand or anything, folks, but that's kind of where we're sitting because nothing's really changed. We'll have to see where these markets go. All right, so we got about 75% voted. 39% at 0, 28% -1, 50% +1. Sure, absolutely. Yep. Expecting some sort of a bounce or consolidation at the current levels. Awesome, guys. Appreciate you. And I will go ahead and share as well. I'm pretty much in the exact boat. Definitely -2 overall. The reason why I'm not -3 is because I expect some sort of a bounce. If we were bouncing already, and you watch as we go going forward, folks, if we do bounce up towards that falling 20-day moving average or resistance, I will go to -3 because that's just kind of how I roll when it comes to my top-down approach. +1, I would be a +2, but I just haven't seen the markets participate yet. I thought for sure out of the gates Monday and Tuesday would be just green, right back up, and we just haven't got it. There's just reluctancy in this bounce, and it might come late. It's only Wednesday. It might come late. We might see Thursday and Friday. Friday has a huge candle. We might close up 2% for all I know on Friday. It's still a bear rally. All right, guys, thank you so much. Appreciate it. So let's get into a sector analysis. And as you can see, we are just bearish across the board. Once again, folks, this is Wednesday to Wednesday. This is a full 5 trading days, not like the performance that I had so far, which is just 3 days. So overall, we're still on the bear side, but we are consolidating and showing a little bit of strength. We got healthcare up there holding on, and then we've got energy just not feeling too well at all. Now, all these charts don't look very good regardless of who's winning or losing. Healthcare, to me, folks, looks like it's just in a bear rally, and it's exactly what this is. It's in a bear rally. We've got resistance here. Let me get my pen. We've got resistance here at about just above the 124 mark. You can go further back if you wanted to go all the way to May and maybe make the debate up to the 126, but that's still below a falling 20-day moving average. Very difficult to trade here. I'd like to be, hey, let's find something bullish in this sector, but it's just a bear rally. It really is. Energy, pretty much the same chart, just a little bit more bearish. It's just not bouncing as high. And it is, however, correcting. So we have the lows in June before it actually set its lows in July. Very interesting. But once again, energy was outperformer for quite a bit. Here we are with this gap to this area down here around 70. I think this just kind of muddles itself. So when it comes to energy, if we have continued weakness and overall bearishness in the markets, I imagine this thing just kind of chomps around here. So something sideways for you condor guys, butterfly guys, playing something sideways in a sector that was holding on pretty good up until recently. It might not come running back, but it might just kind of chomp around sideways and be volatile. Yeah, that's right, folks. Volatility. Fun. Not an easy thing to trade. All right, so let's finish up, and then let's go out and take a look at a few trades that you guys have posted. Please feel free to start posting as well if you want extra trades to look at, because we're light today. So consolidation or a bounce is to be expected. I completely agree. The conversations I've had with you guys and some of the boys here at Maverick, it's exactly where we're at. It's exactly what's to be expected. How it happens is going to be difficult. We are still in a bearish market with little reason to move higher. Keep that in mind. Bearish market, little reason to move higher. So if you do see a big exorbitant move or 2% up day, don't get suckered into it. It's an oversold bounce. We've said this before. The biggest bullish moves are usually in bear markets. So sentiment, bearish, period. Be patient with any corrective action, and you guys, my counter trend traders, you know who you are. This is very difficult to do, whether it's going to be 2 days, 3 days. What's interesting so far, any of my counter trend traders that have been bullish haven't made any money because we haven't gone anywhere over the last 2 or 3 days. So don't anticipate moves until you see them. Even then, the example I gave you on our first chart there, shorter term, shorter targets. Don't shoot for uptrend. Just shoot for something shorter term. More consolidation, sideways to up at most. Make sure that if it gets there, you're pulling the trigger very quickly. Inflation is still an issue. I showed you some of those numbers. Yeah, they could be super delayed, but that new home sales number was ridiculous. I mean, that's high. We are still consuming. We are still purchasing. We are still buying. The consumer is still confident. Unless that slows, the economy won't. So new home sales higher in August, consumer confidence higher. Hopefully they're delayed, but that's why the Fed has still got their foot on the gas. All right. Let's jump out and take a look at the markets here. And we are definitely off and running on a pretty good corrective move. We'll see if it lasts the rest of the day or if we give up most of the ghosts here. Interesting, take a look at that heat map. Everything but Apple is, well, not everything but Apple, but Apple's the big red square there. Everything else is participating. So this is definitely the beginning of, at least now, an oversold bounce, which is what's to be expected. So let's get going. All right, guys, let's get started with our stocks. Mike wants to look at BTU, a butterfly with a 25 mid. $5 strikes, 20, 25. Let's draw them here. 2025. Was that a 30 up there I saw? Yes, it is. Okay. Okay, so Mike is looking for Peabody Energy to continue the bounce that it's had, but stalling out right around that 25 mark. Give it yourself a little bit of an overextension here at 28. Maybe it pulls back. I could get behind that. That looks good. Mike, let me read. Mike, if you could tell me what's your expiration cycle on that BTU, if you'd like to share with us, it might help. Because I imagine the timing on this is going to be pretty specific. If indeed you're expecting what I drew here, or just maybe a consolidation and stopping there, it depends. This would be a shorter time frame and a longer time frame. Okay, thank you. The 21st of October, which is regular expiration. So that is going to be half week, 1, 2, 3.5 weeks. So, correct me if I'm wrong here, Mike. Don't want to put words in your mouth. He's probably expecting a little bit more of the move up to this and then a pullback. That's what I would assume, because he's got plenty of weeks here to go across. Or even if it consolidates, it comes up and back down. That's fine. But the expectations are, look, let's draw this channel. I like this. That somewhere between now and October 21st, it's going to be right there. Excellent. Okay, I like it. I'm going to put it down as a sideways trade. I think that's probably the best place for it. I think that's the best place for it. Okay, thanks, Mike. Let's see. Let's move on to our next trade. James, ASO. Uh-oh, let's see. Currently sitting on the 7th of October. I want to get my dates right. So, 2.5 weeks? No. October. Okay, week and a half. 46 call from yesterday's pivot. Let's do this. Okay, nice. Good confirmation a few days, or 2 days ago. So it did confirm, maybe yesterday I think it did, but it's definitely confirming today. He wants to turn it into a spread after its run. Would love to get your opinion on the short strike as thinking 46.48 vertical. Now, that's tight, but I like it because it's a previous, or it's two previous, I guess I should say, the head and shoulders. It just depends on where you think this is going to go moving forward. Let's see, 46.48, but now looking at a 46.49 or 46.50. So, James, don't allow the move of the stock to dictate your outlook. It's difficult because you're already in the 46 and you're sitting on some profit. So it becomes, okay, where do I want to slip momentum? And 99% of the time, it's going to be based on the performance of that day. So right now, 52 looks good. But if, let me zoom in on this, guys, because it could draw a little bit more. There we go. Now, if you stretch it out, it gives you a little bit different of a perspective. But if you get a candlestick like this, then the 48 looks good. Right now, with this momentum, I'd be shooting for 50, maybe even 52. The other thing to think about is your time. What your target, your time frame. You're only a week and a half. So yeah, maybe 52 is too much. So that's right out. 50, yeah, it's doable. 48 with a week and a half seems a little bit more of the higher probability, even with the momentum that it's got over the last couple of days. Who cares if it finishes here and you have the 46.48? Who cares? So it's one of those things where this is going to be, and it's very difficult to leg into something unless you have it predetermined, meaning, okay, I'm buying the 46. As soon as it gets to 48, I'm selling the 50. Now, if you have that written down, then it's easy to do. But if it's I have the 46, and depending on what it does, it depends on how I feel. That's impossible. It really is. You're asking way too much of yourself when it comes to emotions based on how the stock moves. I would probably err more towards this 46.48. Why? Well, we're in a bear market. Maybe this thing shoots up and hits 52, or maybe it doesn't even get to 48. I don't know. All I know is the momentum of the markets are not in this favor. This is looking good. It's a decent stock. It's a lot stronger. But to err to the overall motion of the ocean, even though this is a bull trade with the bearish market, probably play it a little bit more reserved. That's my 2 cents. I hope that helps. Cool. All right. So it's a decent trade, though. Let me put it down on the bull. It's just going to be tough to target without already having the position on. Okay, moving on. Let's take a look at Apple. Connor wants to talk about Apple. Well, let's take a look at Apple. People worry that they're not going to buy the i4, the 14, the phone. I don't know. Let's see. We got a 141, 155 bear call spread. Okay, let me draw some lines here. 141, 155. Bear call spread. Okay, yeah, yep. I like it. I do. I like it. For some reason, this is not participating. Maybe there's some bad news to it. I like your resistance at the 155. A little bit of extension there at the 141. You guys could see back here and where everybody else messed with it, right? And there we are. So, or I should say the markets did. So 141 area through May, beginning. Look at that reverse head and shoulders. But yeah, we're right back in that area. So I like it. I'll put Apple down as a bear. I like it. That's a good trade. All right. October 14th, by the way, folks. I don't know if I made mention of that, but that's 2.5 weeks. Yep. Yep, 2.5 weeks from today. Expiration week 2. Thank you, Connor. All right, Mike's got another trade here. CF. Coming to a 2050 crossover. See what that looks like here. Zoom in. Oh, it sure is. Sure is. 100 second in. All down. Okay. Okay. All right. Yeah. Oh, yeah. I like it. He's saying the $100 level psychologically. Good gap down. Lower pivot. Could come up here, kiss this point, roll back over. Wonderful. Great. Keep an eye on that. If that happens, jump in. Great chart. Early, right? Just like the trades I showed you on the bear side, but we're in the midst of consolidation or bounce. But I like that a lot. Keep that on your watch list, folks. That's a fun one. Thanks, Mike. All right, Dan's got Citigroup sideways. Let's take a look at it. All right. All right. Let's see, 41, 43, 46. Butterfly. 41's going to be, what's that, 44, 42, 41's about there, because this is $2 increments, 42, 43, right where it's at-ish, and then 46. Hopefully I did it justice. Okay, yeah. Yeah, maybe, I think maybe consolidating right around here that it had in July. 46 is a good resistance there. It really is for that upper leg. But sideways from where it's at, Dan, makes total sense. It could come back down, rally there. It could consolidate, maybe roll over, come back. And October 7th. Okay, so you need this to consolidate sideways over just the rest of the week. Okay, yeah, I like it. Let me put it down as a sideways. This could be a bear as well. So I'm just going to leave it as sideways because it did drop pretty good. And it might, we're looking for it to consolidate, or Dan is. And I can get behind that, especially over just the next few days. A week and a half, sorry. Oh, so you're given enough wiggle room to where it can go up and down a little bit. Excellent. All right. Vincent. Snow. Let's take a look at Snow. This one that Corey had on his bull watch yesterday, and I liked it. I think the only reason why I didn't show it, honestly, is because it's below its 20-day. There's a definite argument that it's at least going to maybe move sideways because I do like it. Even just came back up here, so I'm thinking more range. I think that's why I left it up personally, just so you guys know where I'm at. He's looking at a week and a half, the 7th, week 1, October, 170, 180 bull call spread. And there's an absolute argument there because he's just looking for a blip. If you are range-bound guys, Bollinger-bound guys, you know that revisiting off of the lower band or the bottom of a range and shooting for this in a week and a half, you're really not biting off too much. That's not bad. I will go ahead and put this down as bull. Once again, guys, I really did take a look at this and almost put it on today's class, but I just couldn't get over the fact it was more range than bullish. But since we brought it up in class here, guys, I'm going to put it down on the bull side with sideways, because I do like what Vincent's trying to do here. He's not trying to shoot for 200. Look at this. He's just going for that 180 area, just a little bit of a blip. That's all he's looking for some consolidation. Cool. Like it. You know what I also like to hear? I like to see this is you guys are, you know, we're in a corrective action in a bear market. You're not trying to shoot for super, super high bull moves. You are. There's a couple out there, but we're not getting greedy, and I do love to see that. Of course, then again, Dan's got BBBY here, so let's see how greedy we're going to get on this. I'm just kidding. Continuing the slow bleed lower. Yeah, well, I have to agree on that. This poor thing just got absolutely manipulated. Next level, 6.5, 5.5, 4.5. So going for a little tight little butterfly down here. It's going to be difficult because that 6.5 is going to be right about there. No, that, excuse me, that was 4.5. 5.5 is right about there. 6.5 is right where it's at. Okay, so he's expecting a bleed probably down to this area. In that range, looks like it, and I agree. I don't mind it. I don't mind it. Let me see if I can make this chart look any better. It's crazy how bad this thing just got mashed. Let me stretch it out and zoom it in. There we go. It's a little easier to see in this area. Yeah, he's looking just somewhere, just slightly lower. Yeah, okay. Yeah, I'll put it down bear with sideways. B-B-Y. And as long as no more Reddit comes out, maybe it'll just slowly taper off. But it could easily pop up. All it takes is just a tweet, right? Any thoughts or expectations on JP Morgan? Oh, good question. As earnings season approaches. Thanks for the reminder, Scott. Geez, I guess it is. Geez, we're all the way into of September. So, man, I don't know. This is going to be difficult. I imagine the volatility definitely will pick up, but based on where interest rates are going to go, period, there's going to be good and bad out of the announcement. Hey, this is what we expect. Maybe they beat, maybe they don't. But projecting forward, I don't see how you squirm out of that. Oh, yeah, even though interest rates have doubled, we expect us to do 60% more loans. You know what I mean? So I don't know if I'm oversimplifying that. Just run through the numbers, though, Scott, and this is absolutely coin flip. We'll see. It might be kind of cool to let one or two go first and then jump on a Citigroup or Morgan Stanley, whatever comes later, to see if you can't play like some sort of sympathy play. And then I'd play it slightly directional, bearish. If the expectations are to gap up to 120, maybe play it at 110, 115. You guys know the deal. Run through the classes if you guys need a refresh on earnings plays. But that's kind of where I'd sit, Scott, honestly. Yeah. And the follow-up question on that, will earnings overall be adjusted down? The best thing, once again, opinion, the best thing a company can do is to set themselves up to exceed. So blame it on the Fed. Blame it on the slowdown of the economy. Blame. And then undershoot, and you'll always overproduce, if that makes sense. It really is. It's one of those things where you don't want to do anything catastrophic. Be optimistic in your talk, but put your number lower. So I just don't know how it's like, hey, based on the interest rates, we want to grow here, but we're only going to grow here. So you're going to spin it glass half full, but you're going to blame the economy and what's going on for lower numbers. So projections going forward, I don't know how they're going to be higher. And it just depends if that's already priced in. That's why earnings are a coin flip. So, fun. Cool. All right, Scott. Cool. Thanks for that. Yeah, something to look forward to. Forgot we're already moving into earnings. Okay, guys. Let me cut you loose. Good job out there. Let's type these in, and we'll go from there. Just be safe. Make sure that you're not making trades that you don't need to make. I'm okay with throwing a couple of darts. I know you guys have been doing pretty good out there. Just so happy with all my bear traders out there sticking to your guns and just following your rules. And slow playing these things have really paid off. They really have. So Keep up the good work. Doesn't mean that some of the bear trades that I didn't share with you guys aren't good bear trades. It's just they're bouncing, right? They're bouncing. Okay, let's share this. All right, and then let's add some sideways elements to it. I liked Snow, but also I liked it on the sideways, and the BBBY, I also liked it sideways. It was a slow bleed play, which I agree with. It's awesome, and it's going to be, you have to be patient with that one. But you know, if you want to throw a little bit more of a sideways element in there, please by all means do so. All right, guys, fun class, huh? Interesting. Finishing up September, going into October, which we've always heard about October rallies. I'm going to call it an October bounce. Hey, we'll get there. We've got classes coming up for that. Thank you so much for your participation. If you guys need anything, you know how to get a hold of us. We'll see you next time. Bye, folks.